November 13th, 2025. Stock market investing news. It was a very rough day for the stock market. All three major US indexes fell sharply, marking one of the worst market days in months. Here is a quick look at the closing numbers for today, November 13th, 2025. Dow Jones, DJIA, down about 1.7%, losing nearly 800 points. S&P 500, down about 1.7%. Nasdaq hit the hardest, falling around 2.3%. What caused the drop? The sell-off was led by a steep tumble in technology and AI-related stocks. After a massive run-up in price, many investors sold off shares of big tech companies like Nvidia, Tesla, and Alphabet. Other key factors from today include Disney's stock fell. Shares of the Walt Disney Co. dropped nearly 8% after the company reported revenue that was lower than investors expected. Government reopening. The US government just reopened after a long shutdown. Investors are now feeling uncertain as they wait for a backlog of delayed economic reports on things like inflation and jobs. This new data could influence the Federal Reserve's future decisions on interest rates. Nvidia was at the center of a major market sell-off, falling sharply, not because of any bad news from the company itself, but because of a powerful shift in investor sentiment away from the market's biggest winners. By the numbers, what happened? Closing price. Nvidia, NVDA, closed at $186.86. The drop. The stock fell $6.94. A one-day loss of minus 3.58%. Trading range. The stock was under pressure all day, opening lower at $191.05, down from yesterday's $193.80 close, and hitting a low of $183.85. Trading volume. The sell-off happened on extremely high volume of approximately 207 million shares, well above its average. This high volume indicates strong conviction from sellers. Analysis. Why did it drop so much? There was no negative company-specific news, like a bad earnings report or an analyst downgrade, that caused today's drop. In fact, many analysts remain overwhelmingly positive. The sell-off was driven by three broad market-wide fears. 1. AI bubble fears and profit-taking. This was the single biggest driver. Nvidia has been the undisputed star of the market, still up nearly 50% for the year. Investors are growing nervous that the AI frenzy has pushed prices too high, too fast. This led to a wave of profit-taking, where investors who have made a lot of money on the stock decided to sell and lock in their gains. This was not just an Nvidia problem. Other AI-related stocks were hit even harder, including Super Microcomputer, minus 7.4%, and Palantir, minus 6.5%. 2. Major market rotation. Today, money flowed out of the high-flying superstar tech stocks like Nvidia, Tesla, and Alphabet, and into more defensive, less exciting sectors. This is a classic risk-off move, where investors flee from expensive growth stocks to safer havens. Nvidia, as the leader of the tech rally, was the primary target for this selling. 3. Macroeconomic jitters. The entire market was on edge. With the US government finally reopening, investors are now bracing for a data deluge, a backlog of delayed economic reports on inflation and jobs. The fear is that this data will show inflation is still a problem, which could prevent the Federal Reserve from cutting interest rates. High interest rates are bad for growth stocks like Nvidia, so investors sold first and are asking questions later. What to watch next? Despite today's sharp drop, the long-term story analysts are telling has not changed. The company still has a reported backlog of $500 billion for its AI chips, and demand is expected to outpace supply for years. The entire market is now laser-focused on one date: Wednesday, November 19th, 2025. This is when Nvidia is scheduled to report its quarterly earnings. This report will be a critical test. Investors will be watching to see if Nvidia's growth and future guidance are strong enough to justify its high price and silence the AI bubble fears. Here is a full summary analysis of what happened to Tesla, TSLA, stock today, November 13th, 2025. It was an exceptionally difficult day for Tesla. The stock was one of the hardest hit companies in today's brutal market-wide sell-off, falling much more than the average company.
By the numbers, what happened? Closing price, Tesla, TSLA, closed at $401.99. The drop. The stock plunged $28.61, a one-day loss of minus 6.64%. Market context. This was Tesla's largest single-day percentage drop since July 2025. It was the worst-performing stock in the Nasdaq 100 index and one of the worst in the entire S&P 500. Trading volume. The sell-off happened on massive trading volume of over 118 million shares, far above its average. This high volume shows strong momentum behind the selling. Analysis. Why did it drop so much? Tesla's stock was crushed by a perfect storm of negative news, where company-specific problems ran headfirst into a widespread market panic. Here is a breakdown of the three main drivers. 1. The risk-off market panic, the big problem. Today, investors were in a risk-off mood, meaning they were dumping their most expensive, high-growth stocks to lock in profits and move to safety. As one of the market's biggest winners, part of the Magnificent Seven, Tesla was a prime target for this profit-taking. This was the same force that pulled down other tech giants like Nvidia and Alphabet. 2. A wave of bad news for Tesla, the specific problems. Unlike Nvidia, which fell with the market, Tesla had several negative news items of its own that made the selling much worse. Weak China sales. Reports surfaced today highlighting a steep year-over-year decline in Tesla's sales in China, its most important market outside the US. This renews fears about growing competition from Chinese EV makers. Key departures. Over the weekend, news broke that the key employees who managed Tesla's Cybertruck, Model 3, and Model Y programs have all left the company. Losing such high-level talent at one time has made investors very nervous about the company's future execution. A major supporter is selling. Cathie Wood's ARK Invest, one of Tesla's most famous and vocal supporters, has been selling millions of dollars worth of TSLA stock for several trading sessions in a row. When a major bull starts to sell, it spooks other investors. 3. Widespread economic fear. Finally, with the US government just reopening, the whole market is on edge. Investors are terrified about the backlog of economic reports on inflation and jobs that are about to be released. If inflation is high, the Federal Reserve can't cut interest rates, which is bad for growth stocks like Tesla that depend on a strong economy and cheap borrowing. The bottom line. Tesla didn't just fall with the rest of the market today. It fell significantly harder because it is facing its own serious questions about competition in China, leadership stability, and shareholder confidence, all at the exact moment the entire stock market decided to sell.